Why do banks differ in the terms they offer, including loan-to-cost ratios for SBA franchise startup loans?
Because SBA sets their SOP, their guidelines essentially, but that's basically, there's a big gray area which is called prudent lending. Every bank needs to use prudent lending, and people interpret prudent lending in many different ways. Some banks are extremely aggressive, some banks aren't. Some banks on a franchise startup say, hey, we're going to do 70% of costs. Some banks say 80, and some banks say 90. And so understanding the risk tolerances, and each bank has different appetites of what they're good at. Some banks don't want to do any construction. Some banks don't mind doing construction and holdbacks and draws and things. So that's where our team comes into play, is that we navigate the waters and get you to the right lending institution for your scenario. Sometimes deals are a little bit hairier, and we know the banks that are a little bit more aggressive on certain asset classes. If you're doing hospitality for franchises, some banks like startups, some banks only want existing businesses, and there's a handful, I would say, of very, very good banks that do franchise startups, and we work with the majority of those. So if you have any other questions, go to bookWithBo.com.
If you're looking to acquire a business, stop scrolling on Biz Buy Sell and visit franchiseresellelistings.com. We'll do a customized search. You can get on our weekly distribution where we're sending new inventory weekly to your inbox. So visit franchiseresellelistings.com and opt in today. See you there. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.